Hey everyone, hope everyone's doing well and had a good day. This is the Emini end of day review for Thursday, July 25th, 2024. And coming into the day, the expectation, we had this sell climax yesterday, and it was two legs down, one pullback, two testing around support, the bottom of the third buy climax, so one, two, three, probably buyers below here. We broke out below, the bears still want follow through, but because we had a climactic bar, this trend bar, most likely response is 1 to 3 bars sideways. And so I thought today most likely would be sideways. After trend days, the expectation, so in the case of a bear trend, the expectation is sideways to up, starting by the end of the second hour of the day today. So I thought today, if we did rally, there'd be sellers in the upper half of this bar or the upper third, somewhere within the bar, probably sellers. Of course, yesterday's a bad buy signal bar, pretty tight channel down, and then a bear trend bar, probably sellers above yesterday's high if we get there. And there might be sellers below, but my concern is that it's two legs down in an overall trading range and will probably go more sideways. This blue line is yesterday's low. And we'll take a look at Globex coming into the day. If TradeStation will let us. So here's what the market was doing coming into the day. The market's in a trading range. You can argue it's a bear trend still, maybe a bear channel, but it's very broad, and you can basically treat it like a trading range. Broad channels, you trade them just like trading ranges that are sloped. So in this case, it's like a trading range that's sloped down. So you just want to look to buy low, sell high, and you can make money buying or selling. But in this case, I would call it a trading range. Lots of two-sided trading through here. Higher low, maybe this is a higher low from here, lower highs. Market's contracting. Just look at all the overlap. So probably a trading range coming into the day in the Globex session. And then that sort of hints toward on the open. When we have a breakout on the open, what does Al say? 50% of the time, breakouts on the open, no matter how strong they look, they will reverse. And it's good to know that we had trading range price action coming into the day. And then, like I said, after a trend day, the expectation is sideways to up, starting by the end of the second hour of today. Coming into the day, the context, we obviously had this strong bear trend, small pullback bear trend, but we had an exhaustive sell climax on bar 77. And that reversed, and we tested the top of the bar, 77. Now we're trading back down, but this might be a trading range. Big down, big up, probably buyers below 78. Bar 1's a bear bar, we gapped down, and then a bear bar. Not a very good bar to buy above, even though it's a double bottom with bar 78. There's probably sellers above, probably going at least a little bit lower. And there might be buyers below 78, but bar 1's not a very good signal bar for the bulls to buy below. And 2 went a little bit lower. Same problem for the bulls. Now we have a lower low, double bottom with bars 78 and bar 2 today. But consecutive bear bars, probably sellers above. The bears will probably get a second leg down. It's a micro channel from bar 81 to bar 2. You can imagine the gap down simply as a bear bar. So maybe it's like a 4-bar micro channel. The odds are there's sellers above bar 2. Bar 3 rallied above 2, but closed maybe around its midpoint, maybe below, but there's a big tail on the top of the bar. It's a weak bull bar. There were sellers above bar 2. If you look at the first 3 bars of the day, there's a lot of overlap. All the bars overlap one another. We went down for a couple of bars. We went up on bar 3. Looks like a tight trading range. There are probably sellers above bar 1 and buyers below bar 2. Still, we have this micro channel coming into the day. We finally pulled back on bar 3. We're probably going to go at least a little bit lower. But bar 3 is a bad stop order signal bar for the bears. There's probably buyers below bar 3. It's a bad low 1, maybe at the bottom of an overall trading range. Inside bar on bar 4. And it's a trading range bar. It's a doji. Probably sellers above and buyers below. And breakouts are lower probability with inside bars. You have inside bars are contracting triangles. You have a higher low, a lower high. It's inside the prior bar. The market's getting squeezed. It's breakout mode, but you can expect breakouts of inside bars that are trading range bars to fail. So again, probably sellers above and buyers below. And then another inside bar and doji on bar 5. So the market's in breakout mode. And there's a couple of different ways we can look at this. Bulls see a wedge bottom, 1, 2, 3. Then in consecutive inside bars, II pattern. That's breakout mode within an overall reversal pattern, maybe a wedge bottom. And we're finding support at yesterday's low. So the bulls are looking to buy below the second inside bar, buy above it, look for a swing to the upside. The bears will argue it's still a small pullback bear trend. We're still in a channel. We're getting lower highs and lower lows. And this consecutive inside bars is simply a bear flag. The bears will look to sell above the inside bar and sell below and look for a swing down. Bar 6, we had a bear breakout bar. It's a good looking bar for the bears, but it's the first bar closing below all the bars to the left, so the bears still want follow through. Bad bar to buy above, sellers above 6, probably going at least a little bit lower. And then 7 is breaking out further to the downside, so bear breakout 6, good follow through bar on 7, but possible breakout and third leg down, breakout of a channel. So it might be a low probability breakout here. And whenever you have a breakout of a channel line, like a bear channel line here, the more likely event, or the lower probability event, is that the market accelerates to the downside. Only about 25% of the time, you get a successful breakout that accelerates to the downside, you get an even stronger bear trend. 75% of the time, you get a reversal within 5 bars and then a test of the trend line up here. But so far, looks pretty good for the bears. Now, one other thing I'll mention, I said it before, 50% of breakouts on the open, no matter how strong they look, will fail. So you have to keep that in the back of your mind. And also keep in mind that the Globex session was really sideways. So a bear breakout here might be simply a sell vacuum test of support, and it could be a bear trap. Bar 8, more follow through for the bears. Micro gap, there's a space between the low of bar 6 and the high of bar 8. So we have a fairly good looking bear breakout here, but still we're on the open. And let's keep in mind that bar 1 remains the high of the day, only 20% of the time, And that happened yesterday. So the odds of getting that back to back are unlikely. 80% of days you have a trading range open. And so what we might have here is a sell vacuum testing support and an opening reversal. And again, bulls argue 3 legs down and climactic third leg. Strong enough breakout, the bears should get a second leg down, but it's always dangerous when you're selling a third leg, because third legs are, you think about the market cycle, third legs are the most likely to have deep pullbacks or completely reverse. The bears we've had this extended bear trend. Now we're accelerating to the downside. It's becoming parabolic. You might have a climactic reversal here. But bar 8 is not a good buy signal bar. There are probably sellers above. And the 9, we have a small bull reversal bar. It's basically a doji, really small bull body. And low probability buy setup. The bar looks okay, but you're following a 6 bar, maybe 7 bar bear micro channel. And the signal bar is small. So still probably sellers above. And then we got bar 10. And bar 10 is a little bit of a surprise because bar 10 is a really strong bull bar. Any bear who sold above bar 9 or sold above bar 8 got trapped by bar 10. And if bar 10's a surprise and surprises get second legs, you can expect this bull breakout to get a second leg. I forgot to mention, coming into the day, we're still always in short coming in. And we're probably still always in short here and maybe here. But once we get this follow through bar for the bulls, the market might be flipping to always in long, and we might have an opening reversal. If you think about bars, really all bars in general, most bars do not open or close on their highs and lows. So this bar, 44 yesterday, it's a pretty rare bar. Same with 52, opening on its high. Bars with no tails are rare. Or in other words, most bars have upper and lower tails. And the same is true with the daily chart. You just look over here, most of these bars have tails. And so you know that on the open, especially, what the market might be doing here is it might be creating an early low of the day. We're selling off, but now we're getting this reversal. So this is terrible follow through for the bear breakout. Big down, big up. Market might be in a trading range. The first target is the trend line. Maybe this is the trend line. And then you ask yourself, where did the trading range begin? Well, if we look back, there was a lot of two-sided trading through here yesterday. If you only looked at the green box, you would say, yeah, that's a trading range. That's not a bear channel, not a bear trend. It is a bear trend overall, but all through here, the market found this area to be a fair price. So this could be the top of the trading range all the way up here. But for now, bull breakout and follow through, strong bull trend bar, strong follow through bar, possibly a failed breakout below yesterday's low, and possibly an opening reversal. You can buy the close of bar 11. There's strong enough momentum, strong enough looking reversal. You can take a chance. This is an opening reversal. We're going to at least test the bear trend line. Other traders will wait for higher probability. Some traders don't like to buy bull breakouts when they are below the moving average. The context here is a little different, but what I mean by that is something like over here, when the market's in a bear trend, here's a bull breakout, but you're below the moving average, and bears sell rallies. Same with here, 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 really all of them, even this one here. So some traders want to wait for closes above the moving average before buying. The trade-off there, that gets into the trader's equation. If you wait for bars above the moving average, the stop is further away, your risk gets bigger, but your probability increases as well. 3-bar micro channel for the bulls, and good-looking bull bars, they're all closing on their highs. Probably buyers below bar 11, and the bulls will probably get a second leg up. And then 12 more follow through for the bulls. 4-bar micro channel, 12 closed above the moving average, so more and more traders might start to buy here. And bars 9 through 12, the market is always in long at this point. And we have a fairly strong leg 1 breakout. Maybe a climactic reversal, wedge bottom, strong breakout. Bulls will buy for any reason. They'll buy closes, they'll buy below bars, shallow pullbacks, expecting a second leg up, and maybe a measured move up. And then you can see 13 pulled back within the range of bar 12, tested the high of bar 11, so no micro gap there. However, it sold off and then closed near its high. Now we have a 5th consecutive bull bar, all of them closing near their highs. It's good for the bulls. Still a strong breakout, probably going higher. 13's a bad low 1 after a strong breakout, and it's a bad sell signal bar, so stop orders below will likely fail. If we get below it, buyers below, and probably buyers above as well. This could be seen as a high 1 as well after a strong bull breakout. 14, now we have a more technical looking low 1, but it's a doji after a strong bull breakout, and the probability favors that there's buyers below 14. So if you were to sell below 14, stop above 14, you're probably going to lose that trade, and you're probably going to have your stop run above 14. It's sort of similar to down here. It was higher probability, and you can argue this because it's on the open, but there were traders selling above bar 9 looking for a second leg down, and then we got this surprise. So bulls who bought above bar 9 were taking a low probability trade, and then it ended up working out. So you will have bears selling below 14, taking a chance, big down, big up, we're high in a trading range, and even though it's a small signal bar and low probability, their good risk reward makes up for the low probability. And then you can see 15, we went outside up, so we triggered the sell below and then immediately ran stops, and we tested the trend line. That was the first target after the breakout attempt of the channel line. So we finally have a pullback, but this entire rally could still be a breakout. And we know it's a breakout on a higher time frame when we imagine the 15-minute chart. Bar 10 was the open of a 15-minute bar. 12 was the close. That's a strong bull bar, pretty big bar, closing on its high. Here's the next bar, traded down, but closed on its high. This pullback doesn't exist on the 15-minute chart. It did not trade below the low of the prior 15-minute bar, which was all the way down here. 15 outside up, bull bar closing on its high in a bull breakout. So it's probably better to buy above 15 than sell above, even though it's an outside bar. The context is not good for selling. Limit order bears are having a hard time making money right now, and you don't want to be the first bear to make money. Let's wait and see limit order bears start to make money, then stop order bears, and then we can start to look to sell. So for now, it's still always in long, probably going higher. 16 consecutive bull bars closing on their highs, new breakout and follow through, probably going higher. Buyers below 16, and maybe buyers above, maybe by the close. But at some point, trends weaken, and the breakout phase is the strongest part of the trend, and then we get a pullback, and then the market converts into the channel phase, which is a weaker part of the trend where traders, in this case bulls, prefer to buy on pullbacks rather than at the top of the trend. But this is still steep enough, it's a tight enough channel that you will have bulls buying the close. 17 going higher, still buy the close, buy for any reason, buy below the bar. And then 18 we pulled back and then got another big bar. 18 is the fourth bar in a micro channel, and then you can see it's bigger than the prior two bars. And that's a little climactic, and 18 will attract profit taking from the bulls. Bulls who bought lower will use 18 to take profits, so we're likely to go more sideways for 1 to 3 bars after 18. However, that's not enough reason to sell. This breakout is too tight and too strong, and we're probably going higher. 19 pulled back a little, inside bear bar, but no reason to sell. It's the first bear bar in maybe 10 bars, and bulls will use that as a reason to buy. They'll buy the close of 19, they'll buy below, they'll scale in lower, betting that this will be a minor reversal. And then there were buyers below 19 on bar 20. 20 is a high one, but it's a fairly weak bar. It's a doji. It's a high one after a pretty strong bull breakout. Probably better to still be long. It's obviously still always in long here. But as far as buying above 20, it's not ideal. Bulls would probably rather buy a deeper pullback, and probably buyers below 20. And then 21, a little bit of a surprise. Bull breakout, racing higher. We're getting close to this measured move, the low of bar 9 to the high of bar 12. We could even include 13. Here's the first target for the bulls, a measured move. And 21 obviously racing higher, but 21's another bar, kind of like 18. We can see bar 10 is 15.75 points, and then 21, 14.5 points. 21's the second biggest bar in this rally, and it's possible we have a buy climax, pullback, buy climax, pullback, and then a third buy climax with a pretty climactic bar, 21. So 21, like 18, will likely attract profit taking, but it's not enough reason to get short. We also have the breakout measured move not far above. We'll probably get there before there's any major pullback. And then you can see 22 reached that measured move, went slightly above it, and then pulled back. 22 is a weak stop order sell. Tight bull channel, weak signal bar. It's probably buyers below 22. Because it's a third push up, it's a parabolic wedge. We're expecting a deeper pullback, but not a reversal. So what we might do is test this breakout point. Bears sold above 19, betting it's a weak buy signal bar. They got trapped on 21. If we get a retest to this price, they will likely exit. This price becomes support, and we'll go back to the upside. We sold off on 23. Bear bar with the tail below. Because of the tail below, it's not good to sell below. There's buying into the close. There's probably buyers below 23. But 23 is a high one after a parabolic wedge, so probably sellers above 23. And we'll probably get a deeper pullback. 24 sold off a little further, and you can see the low of the bar tested the breakout point, and then there were buyers into the close on 24 as well. So not a good bar to sell below. Buyers below 24. 24 is a high one after the parabolic wedge, sellers above, and now we have a 3-bar micro channel for the bears. And the distance from the high of bar 22 to the low of 24 is pretty significant in this bear breakout. Even though the context is bad, it's counter trend, this breakout will likely get sellers above and a second leg down. 25 fell a little further. We had a trading range bar. And now 25 is the high one signal bar, but the context is still bad for the bulls because now we have a 4-bar bear micro channel following a parabolic wedge. And there's probably sellers above 25 for a scalp, and bulls would rather buy lower. 26, we had an inside bar, so we did not trigger the buy above 25, so now we have an inside bar. But inside bars, lower probability for breakouts, and now this is the high one. And like I said, bulls would likely prefer to buy below bar 26 than above. And bears, they're selling. They might sell the close of 26, betting this first reversal after the micro channel will fail. and we'll get lower prices. But I do think there's buyers below 25. Bears will take profits below 25. Bulls will buy, betting we'll get a high 2, and then trend resumption. And then 27, we fell a little bit lower than the low of 25. We tested the moving average, and then there were buyers into the close. And 27, even though it's a bear bar, closed above its midpoint. So we have a bull bar, 27. 27, not a good buy signal bar because it's a bear body, and it's still a micro channel from the high of bar 22 to 27. However, now we have 2 legs down, 1, pause, 2. We have a 2-legged pullback and a strong bull trend. There's probably buyers in this area. Inside bar, 28, but reduces the probability because it's an inside bar. 27 was a second leg down, testing the moving average. Then it rallied into the close. There's probably buyers in this area. So if we fall below 28, it's likely that there's buyers below. 2 legs down, high 2, and a bull trend. For the bears, they might sell above the bar, taking a chance, but it's low probability, and it's counter trend. When you're in a strong bull trend like this, and you're getting 2 legs against the trend, 1, pullback 2, it's better to look for a trend resumption. And then 29, we reversed up with a strong bull bar. So 29 is a high 2 signal bar, bull bar closing on its high. It's a good signal bar, and the context is good. There's probably buyers above 29. If any bear was short, they'll get out above 29. Now the market in here never became always in short, but if a bull did exit for any reason, they can buy again above a bull bar closing above its midpoint. They could have bought above 26, but it didn't trigger. Now here they can buy above 29. So you have bulls and bears buying above 29. And then 30, we had a breakout bar closing far above the high of bar 29. There is overlap, it pulled back, but this is a pair of strong bull bars, and we're probably going higher. This looks like a spike pullback, and then maybe all through here will be a channel phase for the bulls. 31, we're going higher. Now we have a micro gap. The high of bar 29 and the low of bar 31 do not overlap. That's a sign of strength. This is a strong bull breakout, probably going higher. The only problem here is that if this is the channel phase, bulls take profits above swing points. So here we might find some resistance, but the bear's hoping for a double top here with bar 22 and maybe 32. This momentum and trend resumption by the bulls is stronger than the bears would have liked, and the selling pressure is weak, so we're probably going higher even if we do pause here. 32, we have a bear bar falling below the bull breakout, testing the micro gap high, the bar 29 high, and then finding buyers into the close. So bad signal bar for the bulls to buy above 32. And the context is okay because it's a pretty strong bull trend. But the location, you're at this swing point, it's not ideal to buy above 32. But then 33 was a good entry bar. So whenever you have a bad signal bar, if you're buying above 32, you need a good entry bar to convince you to stay in the trade. And that's what 33 was. 33 is a good bull bar. Now we're breaking out to a new high, and the bulls want follow through. Nothing for the bears to sell. They can argue it's maybe a wedge. 1, 2, 3. But the bull bars are strong. They're all closing on their highs. And the bear bars, most of them are closing above their midpoints, or they're just small trading range bars. So the selling pressure is weak. We're probably going higher. We're probably in the channel phase in a pretty tight bull channel. 34 going higher. Consecutive bull bars closing on their highs. Good for the bulls, but might start attracting more profit taking. 2 legs up and nested 2 legs up, but we'll probably go at least a little bit higher. This leg 2 measured move might be out of reach. it would be pretty far, but maybe if we use the bodies of bars, like the open of 9, the close of 21, that wasn't quite right. That looks more doable. Maybe we'll get a leg 2 measured move. But again, we're in the channel phase at this point. We're getting more pullbacks, more bear bars, and the trend is weakening. But for now, still no reason to sell. Strong bull trend, strong bull bars, always in long, okay to be long. 35 continuing higher. It might be by the close, but it's a little climactic. The market's rallying faster than the moving average can keep up. This creates a triangle shape, and that's just a sign that it's climactic and it might attract profit taking. So there might be sellers not far above. And then 36 started to pause. High 1 above 36, inside bar, trading range bar, probably sellers above, but it's probably a minor reversal. 36 is likely, or 35 is likely, not the high of the day at this point. Probably buyers below, buyers at this breakout point. Outside up 37, but another trading range bar, probably sellers above, bulls taking profits, but still limit order bears not making money since here. So this channel is too tight. There's no reason to sell yet. Buyers below 37. Inside bar 38, we have an IOI pattern with trading range bars, but probably a bull flag and a sideways pullback, which is a sign of strength. Breakout direction favors the upside. If we do get a breakout to the upside, it might be a third push. 1, 2, and then 3. 39 bull breakout to a new high and closed at the new high. That's good for the bulls. They want follow through. 39 is a weak sell signal bar, probably buyers below 39, maybe buyers on the close, probably going at least a little bit higher. And then 40, bear trend bar, but pretty tight trading range through here, and it's likely a bull flag. Buyers below 40, buyers below 37, scaling in lower. And 41 disappointed the bears. So it was an okay bar. It could have closed lower, but then 41 was really disappointing for any bear taking a chance. It's bad follow through. It failed to break out below this tight trading range. It's probably just a bull flag. Maybe 2 legs, 1, 2, high 2 above 41, and a bull trend. Or 41 rather. 42 bull bar, bad sell signal bar, buyers below, buyers on the close, probably going higher. 43, another bad sell signal bar, buyers below, a little climactic, testing the new high. And now we have, maybe it's 2 legs up. 42, we rallied, pulled back. 43, we rallied, pulled back. So one more rally here would be maybe a nested wedge pattern. And then we rallied on 44. And so maybe it's 3 pushes up in a couple of ways. Again, 42, we rallied, pulled back, and then fell on the open of 43. Rallied again, pulled back into the close of 43, and then 44 rallied. That's 3 pushes. And then there's a big 1, 2, 3 pushes up as well. So this is an area where the market is still always in long. It's a tight bull channel. However, the context makes sense to get out of longs and maybe reassess. We're probably going to come back and test this breakout point, maybe even down here, the bottom of this third buy climax. 1, 2, 3. So we might convert into a trading range fairly soon. This is a third leg. That's a late leg. Not ideal to be long up here. And then we went outside down. 45. So 45 is enough reason for bulls to exit their longs. It's an outside down bar, closing near its low. After 3 legs up, nested wedge, probably going to come back and test bar 41 low at a minimum. And there's probably sellers below, bulls getting out. and bears taking a chance for a swing trade. And then 46, really good follow-through bar for the bears. We're at the moving average, but it's a good bar. We're probably not going to stall here. The worst case for the bears is a sideways bar before a second leg, but 45 and 46, strong enough, good enough momentum, strong enough bars, we're probably going lower. Sellers above 46. Some bears will sell the close at 46, betting the breakout will grow and they can hold for a measured move. There's also a couple of things. Let's see where we are. I said this was a fair price. This might be the top of the trading range. And we broke out above it. And then we came right back to it. And we're certainly in the upper third of yesterday's range. So here's yesterday's range. And here it is broken into thirds. So this upper, or this gray line here, is the start of the upper third. And we're expecting sellers in that area. And sure enough, we're getting sellers in that area. So we could fall back to the middle of the day's range, maybe even come down. What are the odds we get a strong bull trend day after a strong bear trend day? It's unlikely. Remember, the expectation was a sideways day, so maybe we'll get a midday reversal. It's coming at a good time, bar 45. The day has 81 bars, so we're about halfway through the day. So the time makes sense, the bars look good, the context looks good, 3 pushes up into the upper third of yesterday's range. So this is setting up a pretty good looking midday reversal. And then more follow through 47. 3 bar bear spike, all really good bars. They're uniform in size, they're all closing near their lows. Micro gap, the low of bar 45 and the high of bar 47 do not overlap. And we're breaking out far below all these bars to the left. I just want to draw the open of the day. That could be a magnet. On trading range days, the open of the day, the bulls and bears will fight over control of the close. And so here at this point, strong enough breakout. The market looks like it wants to go lower. This is a leg 1 breakout. It's a major leg 1 breakout. So bears can sell for any reason. Sell a pullback, they're probably going to make money. Now we might test this breakout point, the bar 41 low. We're in a trading range here, fairly tight bull channel. Bulls will buy below here, betting this breakout will get a second leg. They got trapped, but if we do pull back, this red line becomes resistance. 48, we had a pause bar. Now, after this strong bear breakout, you get 48, a trading range bar closing below its midpoint. There's probably sellers above. Remember this red line, the breakout point, bulls buying below, got trapped. So if we do rally, there's probably sellers above. This was a strong enough bear breakout that both bulls and bears are trapped. Bulls who are buying up here, they're trapped into a losing trade. Bears who never sold, they're trapped out. So both bulls and bears are looking for any pullback, in this case any rally, to sell. The bulls want to get out of their losing longs at a better price. The bears want to sell at a better price. 49, we went a little more sideways to down. So if you're a bull and after this breakout you get this pause bar and then another pause bar, it doesn't look like the market's getting a climactic sort of buy vacuum test of any resistance, and this looks bad. This is a bad buy signal, 49. It's a micro channel since 45. Probably sellers above, probably going lower. And we'll probably fall for a measured move. And you can see the measured move gets us close to the open of the day. Inside bar 50, but small bar plus inside bar. After a strong leg 1 bear breakout, there's probably sellers above the bar, even though the bar looks fairly decent. It's really small. The context is bad. 51, we went a little bit higher, but we're still within the range of 48, which is a trading range. It's a small trading range on a lower time frame. So 51's a rally to the top of a trading range. Probably sellers at the 48 high, sellers at the breakout point, sellers at the 50% pullback of the bear breakout. The upside here is probably limited. Even though 51, it's a 3-bar micro channel, it's a bull bar, not a good sell signal bar. The context is better to be short. So I might have forgot to mention, either here or certainly here, the market flips to always in short. I was also saying here, when it's consecutive buy climaxes and nested, the price action, it's always in long when you look at it, but it actually makes sense to be out of longs. And so context might make it always in short. And then this just confirms that. So we're always in short here. Better to be short. 52, even though 51's a bad sell signal bar, if you bought below it, your entry bar is terrible. So if you're a bull and this is your entry bar, you'll probably just give up. Bull's hoping it's a lower low, double bottom, but the signal bar, again, is bad. Sellers above, probably going lower. Sideways on 53. So you can see after this breakout, the bull's trying to rally, trying to reduce the damage, but really going more sideways to down. So at some point there will likely be a second leg down caused by bulls giving up. It will be a give up bar. 54 we rallied, but within this trading range, it's a bear flag, and bears are going to sell rallies. So 54, traders will sell the close, sell above, expecting the reversal to be minor and lead to sellers. And then 55, strong bear trend bar, that might be the start of the give up. It'll probably get follow through. It's a good looking bear bar, and probably a breakout of some sort of wedge. 1, 2, 3, but the buying pressure is bad. It's a spike in channel, but this entire spike in channel is probably a breakout on a higher time frame chart. So if you think about the 15-minute chart, 46, the open of the bar, is the start of a 15-minute bar. 48 is the close, so it opened near its high, closed near its low. The next one, we actually had a bull bar, but it did not pull back on the 15-minute chart. And then we continued from the open of 52 to the close of 54 with a bear bar. So we have a strong bear bar, a couple of dojis, and now we're selling off on 55. So the bulls not having good buying pressure, and the context is bad. And then 56 was follow through. So another breakout and follow through for the bears, probably going lower. This looks like the give up. Sellers above 56, probably sell the close, sell for any reason. 57 we paused. Traders might use 57 to sell. Any bull who bought betting on 3 pushes down, they got trapped. They'll use any rally they can to exit their losing longs, and bears who didn't sell will use any rally to get short. Sellers above 57. It's a weak buy setup. It's a minor reversal. Consecutive dojis on 58. So we have a sell climax and then 2 bars sideways. Maybe we go sideways for 1 more bar, but there's probably sellers above and more room to the downside. And then instead we broke out 59. Strong bear bar. Now the problem the bears face, possibly a parabolic wedge. Maybe this is all one push. It is a simple leg. There's no pullbacks from the high of 54 down to 59. So maybe it's 1 pullback, 2, second leg subdivided into 3 pushes. So we might pause here on 59. It's a good looking bear bar, but it might be a second leg and a nested wedge. You can see 60, we bounced. But we're expecting a minor reversal here, not a major reversal. So the profit taking, the bull bar in 60, is due to bears taking profits, not bulls aggressively buying, looking for a major reversal. This bear channel is too tight. We're probably going lower, probably sellers above 60. 61 bull trend bar, but probably 2 legs up. If you think about what happened on 60, market rallied, pulled back into the close, then rallied again. That's 2 legs up, counter trend. There's probably sellers on the close and sellers above bar 61. Outside down 62, probably going lower, bad signal bar for the bulls, sellers above. Because the bar closed with a tail below, better to sell the close than sell below. So we might have traders selling the close. You also might get a retest of the 61 close. Bulls who bought here got trapped. If the market comes back and tests that area, bulls and bears will sell. But instead we got no retest. Traders sold the close of 62. We're going lower. Now maybe we're getting a parabolic wedge. 1, 2. If this breakout continues and breaks the channel line, that'll be 3 legs down and a parabolic wedge, especially if we come near the measured move target, the open of the day. A couple of reasons to expect support not very far below. So a good looking bear bar is probably going at least a little bit lower, but bears might exit on a sign of strength, taking it as a gift. And that's a bar like 64 is what I'm referring to. Kind of like 21, 3 pushes up. Bulls take profits, we go sideways. We're expecting a minor reversal, which is what we got, and then continuation. So the same thing applies here. 64, climactic bar, might be one of the biggest bars, might be the biggest bar in the sell-off, which has gone on for about 20 bars. So 64 might be an exhaustive sell climax. We're testing the measured move target, we're breaking out of a channel line, we're testing the open of the day. Even over here, you can say we're testing the bar 14 high, which was a bad signal bar, but the market rallied. There was a retest on 16, but we're testing it again on 64. So we might look for a bounce here. But because it's a parabolic wedge, the expectation is a minor reversal. So just like what I said over here, parabolic wedge up to 21 or 22. Buy climax, pullback, buy climax, pullback, buy climax. It's okay to be long here, but it's not optimal. It's really not ideal. Better to buy a pullback. You get a test of the third buy climax low, the market reverses up. So the same thing applies here. Sell climax, pullback, sell climax, pullback, sell climax. It's okay to be short as long as you have a stop somewhere above, although here is probably a skunk stop because if we trade above 62, there's probably sellers above. But still okay to be short with a wide stop and look to sell on a pullback, maybe add on a pullback. But because it's the biggest bar, it's a parabolic wedge, it's okay to take profits on 64. Bulls might buy if they're aggressive, but not ideal. The buying pressure is weak. And then follow through 65. Testing yesterday's low once again. We're getting close to it. We didn't quite get there. But still, it's 3 legs down. Probably start to pull back soon. Maybe buyers below 65. Mostly bears taking profits, but aggressive bulls will be buying somewhere around here. 66. We have a bear bar with a bull body. Closed below its midpoint. Weak sell signal bar. Probably buyers below. Breakout of a channel. Probably pull back and test the trend line within 5 bars. That might be starting here. 67, another bear bar with a bull body, low 1 short, but 3 legs down, parabolic wedge, probably buyers below 67, expecting a deeper pullback. 68, inside bar, the same applies. It's a low 1. Technically on this chart it's a low 1. On a smaller time frame it's a low 3. The market rallied, pulled back, rallied, pulled back, rallied a third time. Probably buyers below for a second leg up and a deeper pullback. Some of the targets include the breakout point of the third sell climax, so the bar 59 low, the trend line, the moving average, and maybe the top of the last sell climax, the high of bar 62. That's obviously the furthest one. The first one the bulls are looking for is either going to be the breakout point or the moving average, but you can see all three of them are in the same area. 69 triggered the low one, reversed up. Now we have a high 2. It's a micro double bottom, bull bar, bull reversal bar, 69. Now we've gone 4 bars without a bear body. So at some point there might be a little bit of a give up from the bear side. The bears, if they were selling 65, they've got no follow through, so they might give up and look to sell higher. 70, we're going a little bit higher. The best bull bar out of all these bull bars. And I say these are bull bars, they're bull closes, but if they close below their midpoint, they're technically bear bars. But 70, we finally have a bull bar closing near its high, a little bit of a give up, probably get a little bit higher because bears don't necessarily want to sell above a bar that looks like 70 when it's the 5th bar without a bear body after a possible parabolic wedge and a third sell climax. Bears would rather sell pullback. You can see here all of those prices, the trend line, the breakout point, the moving average, all in the same area. That might be the test target. And you can see price got vacuumed up straight to it on 71. But 71, now we have, you could argue it's a parabolic wedge. Rally on 65, pulled back, rallied on 67, pulled back, and then a parabolic wedge broke out of this bull channel line on 71. Big bar, testing all sorts of resistance. More of a sell the close bar than a buy the close bar. It's counter trend, and just like over here, once again, when you have a parabolic wedge, it's a breakout on a higher time frame. So you do expect a deeper pullback, but ultimately trend resumption. So the same thing applies here. Parabolic wedge for the bears. So you expect a deeper pullback, which we're getting. We're testing a cluster of resistance here, but ultimately you expect trend resumption down. This is a breakout on a higher time frame. 72 went a little bit higher. We did end up testing the high of the final sell climax, but remember what I said. If your stop was above 62, that's a skunk stop location. The best case scenario for the bulls here is the trading range. This is a strong, tight bear channel, and it's a breakout. Again, it's a breakout on a higher time frame, so any pullback will likely lead to at least a test of the bottom, if not continuation. And so it is true, this was the last major lower high, but the problem with having your stop there, or at least having your stop get run there, if you're short down here, it makes sense to have a stop here, but you don't let that stop get run. Maybe you exit above a second reversal, like 69, and then look to sell higher. So you have bears selling here, you have bulls who bought down here. They know they're looking for a scalp at best. It's a big scalp, pretty big distance, but there's likely bulls and bears selling above here, expecting resumption of the bear trend. 73 bear bar closing near its low. And the bull move was climactic, it's parabolic. You can see the trend line getting steeper and steeper, testing resistance. Parabolic wedge, deep pullback, probably get resumption to the downside. So 73 is not the worst stop order short in the world. And then good follow through 74, probably going lower, consecutive bear bars, breakout and follow through. Sell to close 74, probably get at least to 66 low or the low of yesterday. We came so close to the low of yesterday on 66 and then had a deep pullback, but we'll probably get there. 75 continuing lower. 3 bar spike for the bears, probably sellers above 75, probably going lower. And then 76 tested the low of yesterday once again, broke out below the swing point, and there were buyers below. The problem with 76 is that it's a weak signal bar. It's a trading range bar, and it's a bear micro channel. You could call it 5 bars from the high of 72 down to 76. But this breakout's strong enough, you're probably going to get a second leg. So it's more likely there are sellers above 76 than buyers. and instead trader sold the close of 76. 77, climactic bar, nested second leg down, 1, pullback, 2, 1, pause, 2, but not a bar you want to buy the close of. There's not that much overlap. You look to the left, there's a lot of space. We could easily come back down and test the low of the day. And this would be one of those sort of rare days where most days you've seen the high or the low of the day by bar 18. That's right here. So at this point, more likely we've seen the low. And then up here, likely we've seen the high somewhere in here. But now we're getting so close to the low again that we've probably seen the high, but we may not have seen the low of the day. Follow through on 78, probably going a little lower. It's a micro channel still, bear breakout, but it is 2 legs down in an overall trading range. Big up, big down. So this might end up being a second leg trap with buyers not far below. 79 going a little bit lower, but the bars are shrinking. They're getting smaller and smaller as we come close to the low of the day. Again, maybe a second leg trap. Better to look to take profits down here. Inside bull bar, 80, unlikely to reverse. It's probably a minor reversal. And then, of course, there's just one more bar left in the day, but probably buyers below and sellers above. And then 81, we rallied a little further. The sellers came in above the high of 79. The market could not close above that price on 81. For always in today, always in short coming into the day, but probably by bar 11 or 12, the market flipped to always in long. And then through here, always in long all the way until up here it gets a little iffy with 3 pushes up. It's a nested 3 pushes up. 1, 2, 3. Bulls will look to take profits up here. 1, 2, 3. You get a bear bar closing near its low, 45. Bulls will exit below. Then you get good follow through. The market's always in short. 46 or certainly by 47. 3 bar breakout, closing below the moving average, and it's a strong breakout. And a possible midday reversal. And then through here, the market never became always in long. Here, the market did not become always in long. The bulls had to do more. Stop orders today. Reasonable to sell below 6 and 7 and 8. And then you could buy above 9, taking a chance. It's an opening reversal. You could buy above 10, 11, 12, 13. Always in long, buy above any bull bar, closing above its midpoint. All of these bars you could buy above. Maybe you buy here for a scalp. I would not buy above 21 because it's a parabolic wedge. You're expecting a deeper pullback. Better bar to take profits on as a bull than to look to buy. And then high 2 above 29 you could buy above. Still always in long, buy above any bull bar. All through here. 42 you could buy above. And then here, not ideal because 3 pushes up. If you're buying 42, you're buying for a scalp. And then 44 is a nested wedge pattern and not ideal to buy. 45 you could sell below, not high probability quite yet, but then you get 46, 47. You could sell below these bars. The probability gets better. Low 1 or low 2 below 51, not a good signal bar, but the context was good. You could sell below. Always in short, sell below any bear bar, all through here. Tight channel, low 1 below 61, bad signal bar, but probably a minor reversal, and always in short, so okay to be short. Parabolic wedge was reasonable to exit on the close of 64, 65, and then through here. Maybe you can buy above 69 for a scalp, or 70, it's better. 70 is a better bar. Expecting a test of that cluster of resistance I had drawn, the breakout point, the trend line, the moving average. But if you do buy here, the target's probably about the moving average and the breakout point. And then you could sell below 73, even though it's a micro channel since 69. The context was better for the bears. Strong, tight bear channel, vacuum test of resistance, and then reversal back down, big up. Best case for the bulls is the trading range, so we're probably going back down. You could sell below any of these bars, still always in short. I think selling down here became a little riskier. You're getting a low in the day's range, climactic bar 77, and a possible second leg trap low in a trading range. And I would not buy above the 80. It's too late in the day. Bar is too small. Channel down is too tight. Really a simple leg. It's a breakout. For limit orders today, bar 2 was a bad buy. You could sell above it. And then you could sell above bar 9. That was probably the higher probability trade. Bar 10, you would have gotten trapped. And the thing with selling above 9 is actually a good topic. Bears would rather not sell above a bar like 9 for a couple of reasons. Bar 9 is a bull bar closing on its high. So in a micro channel, the bears prefer to sell above a bear bar like bar 8. And so if you were a bear that sold above bar 8 and then bar 10 trapped you, you can see the tail on 11 gave you a chance to exit at break even. Just thought that was interesting. Micro channel, strong bull breakout, bad low 114, buyers below. Another micro channel, bad low 1 below 19, buyers below. Another micro channel, but this time, even though it's a weak sell below 22, you are expecting a deeper pullback. Now there's a micro wedge from 23 to 25. Let me just see if I can draw that. 1, 2, 3. And then low 1 below 26. Buyers below here, buyers below here, buyers at the low of 21, buyers at the moving average. These are all limit order buys. Another micro channel, bad sell below 31, buyers below, testing this breakout point. And then another micro channel, bad low 136, buyers below. But up here is getting a little riskier to buy. After 2 legs up, you're expecting sellers in this area from yesterday's range. And so not as ideal to buy below a bar like 44. Strong bear breakout. Bad buy above the inside bar 50. You could sell above it. Another bad buy 53. Micro double bottom, but weak signal bar. Bad context. Sellers above. Micro channel. Sellers above. They got triggered on 61. Micro channel. Sellers above. But now you have a parabolic wedge. So less ideal to sell above here. Better to sell a deeper pullback like the breakout point, moving average, trend line, and the top of the last sell climax here. And then through here, there were no pullbacks. And bulls may have bought below 66, but the momentum down, not ideal. So if you did buy below here, you had a chance to exit quickly before 77 sold off. And where do we go tomorrow? Now we have 2 legs down, 1, pullback 2. Lots of overlap on these bars. But this is fairly tight, and there's not really any decent buying pressure from the bulls. And so we might be in a trading range from here. Maybe buyers below, but at this point, bulls who bought here, they got trapped yesterday. They used today to exit, and there were sellers into the close. And so we could actually fall further. Some targets for the bears include breakout points. This one, which we actually tested. There's the measured move target of the breakout, which brings us to here. And you can argue this bar, the doji, on June 4th was a weak buy signal bar. So the high of that bar, you got trapped if you sold above it on this bar, never retested it. So that's a target near the measured move. And if you use bodies, maybe it's closer. Not quite the same, but they're in the same general area. So there are targets below with pretty good momentum. You also have the moving average on the weekly chart. That'll be a target, 53.87. So 53.87. It's about as close as I can get, which is right about here. The high of that bar, 53.77. So 10 points above the bad signal bar here will probably be support. But until there's a reason to buy, the bulls won't buy. So we have two legs down, but they're pretty tight. One bull bar and about 6 or 7 bars. So the bulls really need more buying pressure. Because today was a trading range day, increased chance there's buyers below. It's a low one, but this low one on the 23rd of July was a better sell than below this low one, the 25th, because now you have two legs down with lots of overlap, and we know what this bar looks like. Big up, big down, probably buyers below, sellers above, probably go more sideways. As always, please feel free to leave questions in the comments and include timestamps for any question specific to this video. Alright, hope everyone has a good rest of their night. Thanks for watching.